Social media interactions become interesting only when it is two-way. You must get a fair chance to interact with the person you follow or the person whose videos you watch. I have started this new initiative, Ask Milestones to Wealth Anything, AMA in short, through which all of you can stay in touch, ask me questions you like to ask, clear your doubts on personal finance, learn more about Milestones to Wealth and about our PMS products, and stay connected. So, this brings us closer. I am able to be closer to you, to help you in whatever way I can. You feel closer by asking whatever you wish to, and we grow together, helping each other along the way. So fill in this form and stay connected through Ask Milestones to Wealth Anything. I am going to talk to you on the topic making profits while playing safe. The moment I say playing safe is a strategy, people think that they will not make money. But that's not our experience. Whenever the markets are irrational, whenever valuations in popular parts of the market are very high, whenever everybody is chasing returns, it's very important for us to think differently. It's very important for us to advise clients to play safe. What does this mean? It means we tell clients to take profits where there is a lot of euphoria, where valuations are frothy, and to take that money into a place where nobody wants to look, where valuation is in our favor and businesses have reasonable prospects. It's also important to take money from places where all the good news is factored in and put it in a place where all the bad news is factored in and there is no expectation of good news. When you do this, what happens is you move your capital from places where valuations are running very high and future earnings are already discounted in the present, and you put it in a place where even the current valuation of the business is not adequately reflected. In the place where the business does not even reflect its fair valuation, when you put money at a favorable time, what happens is that the business slowly starts doing better, the market starts seeing them differently, and then they come into favor when the markets are willing to pay higher valuations for them and everybody starts to chase them. So, you have to apply a counter-cyclical approach to invest safely. So, when I say playing safe, it means playing it ahead of the market and playing the cycle against the market and still making money. This is not difficult. Everybody can do it, but you need the right advice. You need to accept the advice when nobody else is doing what you're doing, and you need to believe in what you're doing when others are not going to even consider what you're doing. So, to think differently, to be a contrarian and to execute that contrarian thinking requires conviction. Either you should have your own conviction or you should trust your advisor. If you do that, then you will always go away when the markets are very expensive and you will always enter when what you buy is very cheap. That itself will ensure that you are always playing safe, and when others want to play aggressively, you would be able to make your profits. So, starting by playing safe will lead you to a place where you could be making profits into the future. That in essence is what we believe in and we want all our clients to deeply believe in. It's not about where we did or what we did, but it is the outlook, the investment approach and the need to be conservative and correct in where we put our money. And it is that conservatism and correctness which creates returns when others are chasing it desperately. We would continue to do exactly this. We would sell out of even these defensive parts where we have invested when the market is chasing them and fear rises and people want to desperately own these parts of the market, and we would go to own other parts of the market which were probably in favor for some time and are now gradually falling out of favor. This is essentially how valuation of your holdings in your portfolio will always be in your favor, and you would always ensure that you are never buying very expensive assets. By doing that, you create a habit of buying assets when they are in your favor and when valuations are supporting investment, and you hold them till the valuations become excessive or too good for comfort. So the process takes care of that, the approach takes care of that, and the whole philosophy is to ensure that you participate adequately in that. We thank you for all your support and being with us on this journey, and we want you to win when it is very difficult to win, by participating when it is very difficult to invest. Buy when there is blood on the street. You will profit when everybody wants to buy from you. Thank you very much.